The Business Journal Roundtable Series is sponsored by iSynergy, creative digital advertising.
I want to move the discussion to the rental market. A couple of things interest me. You say there's investors that are buying up rental properties, and we see that in the Business Journal. We see some of the big apartment complexes and even condos complexes are being sold. But we also hear from people in the inner city that the rents are outrageous. And these out-of-state people are coming in and jacking up the rents, and people can't pay it.
Yeah.
So let's talk about this. Who are these people?
Well, I mean, we have experience. We also have a division of property management. We've seen people from New York, California, large cities, large investors, even global, South Africa. We've seen investors coming in our area from everywhere, and you're transitioning to our area because the cap rate in out west in California or New York, the amount of money they have to spend for that investment to get a low cap rate, they can buy on the cheap here and get a lot better, higher cap rate in our area. So that's what's driving investors from all over the country and even all over the globe to our area, because the property is really cheap. And the supply and demand has pretty much pushed those rents up. The market has driven that up. I mean, the rents are that high because of the market.
Or because these out-of-town buyers came in and jacked them up?
No, I think whether it was out-of-town buyers or local buyers, I still think, I know a lot of people who own some large complexes locally, and they're locally owned. They're getting the same rents. I don't think it was driven up by outsiders. I think it was driven up by old-fashioned supply and demand. The market is demanding that because the rental market has been so overpopulated over the last couple of years because they can't buy the houses. So the rental market has just blown up since the pandemic.
You know what? As far as affordable housing as well, and I think you guys have probably seen this, where you've got these out-of-town investors that come in and buy some of these older homes, and whether it's Youngstown, Warren, wherever, and maybe they don't have the incentive to keep those homes up. So you've got the property, true homeowners, and then the rental properties, and if you've got the owners of these investors that come in and don't keep those homes up to code, and you've got cities that don't enforce, that really affects property values, and it affects the purchase market in those areas as well, from what we see.
I have seen some investors purchase, and they're always focused on the rent rate, where that was used in the last couple of years, whereas 5-6 years ago, they could care less just because the property was reasonable. But they see the rent rate compared to their cities, and I usually have to remind them, like, hey, here, you're not going to get $1,000 for a one bedroom. So don't do that, or your place is going to sit. But its inventory is lacking, somebody needs a place to live, they're paying these higher rates. So you're having a battle on both ends. People want new places. They want it to be a little bit more modern, or at least painted in the last 10 years. And some of these landlords don't care. Luckily, the couple of investors that I do work with, they come into town quarterly. They have a property management company, and they change the management companies when they don't see them taking care of the properties as they would, or they've come in and they remodeled them, and then the expectation, and I can see. But if you just want to say, oh yeah, I painted the porch and I want $1,500 for a 3-bedroom in the inner city that used to go for $500 a month.
Which is surprising too. Exactly, we focused a lot. Well, we got a lot of investors because property value, single-family homes are so high. A lot of your local investors were selling their single-family homes because they could sell it more than they could ever sell it before. But on the opposite side, these out-of-town investors, it's not only large complexes. They're buying a lot of single-family homes. There's a big market on single-family home purchases on these outside investors and renting them out. I've seen a big shift in that.
And I feel the more fourplexes and the larger ones are more people that are in our area buying the larger plexes.
Exactly. I agree. Yeah, you're super seeing a lot of that.
But these out-of-town investors, they're not buying single-family homes in CANFIELD, are they? Or in the higher, it's mostly in the low-income areas, is that right?
My experience has been not necessarily low, I'd say, moderate. You have your different ones, but my experience has been more, mid to, moderate. They want stable areas. They want stable real estate. And you may have, the opposite, but that's what I've seen.
I see a mix of it.
Yeah, they're buying in, good stable markets. They're not buying the $10,000-$20,000 properties. They're buying, $60,000 to $80,000 single-family homes and renting them out for top dollar and getting really good cap rates, which is a lot better than buying, real estate in New York and California, and having to spend $1 million to get 7 or 8% cap rate compared to spending that same amount of money around here getting 12-13% cap rate.
The Business Journal Roundtable Series is sponsored by iSynergy, creative digital advertising.